Hit it.
It's Friday, June 28th, 2024, episode 242. I'm Patrick Ceresna.
And I'm Kevin Muir. This week, we welcome Vincent Deluard from StoneX. Vincent talks to us about the French election and reveals his best two trades to take advantage of the recent political volatility. And then we have a surprise second guest with a return of Kuppy's Corner that you don't want to miss. With quarter end upon us, we turn to Patrick's magical voodoo technical analysis to see if he can make any sense of this madness in talking charts.
And folks, we might even drink some beers along the way. So Danny, hop on. What beer are we drinking today?
Well, I haven't drank it today, so I'm going to actually open it now. We're drinking
All right.
Alhambra Reserve 1925, full-bodied Pilsner style beer with intense flavor, brewed with the legendary Saz hop variety.
I'm just going to go out on a limb and say that anything from 1925 has got a good chance of being skunky.
It is pretty funky.
And you know what, though? I actually love this beer. When I was in Cordoba, Spain, just the other week, I had this and I was like, "Oh my God, we got to bring this back and feature it." So I got one for Danny, and it's a really delicious beer. We'll rate it at the end of the show. All right, Kev, give us some side effects, buddy.
Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in the show. Side effects of too much huddle may include the hedge fund hiccups, the bond burnout, something Patrick suffers from all the time with his attempts to get long, and then the quantitative queasiness.
All right, let's get Vincent on the line.
It's our great pleasure to welcome back to the show someone that I've always enjoyed chatting with, and it's none other than Vincent Deluard. He is the head of global macro strategy at StoneX. Vincent, thanks for making time for us.
Thanks for having me, Kevin. It's always a great pleasure to catch up with you.
Yeah, and so we're going to talk about the French election, and I think it's fascinating because I didn't realize what a big deal it was, and you wrote this terrific piece that is so well written. It's probably one of my favorite pieces I've read from you, and it's fun, and not only that, you have some specific trades that you suggested that people should look at. Before we jump into it, let me just read how it starts. He says, the summer vacations usually bring much-needed relief for the famously grumpy French. Political disagreements and economic worries gently fade away with the warm province sun, the song of cicadas, the smell of lavender, the taste of pastis. What is pastis, by the way?
It's a very strong alcoholic drink made from a grass, dill. It's a white, you mix it with water. It's very weird the first time, but very addictive after that.
Okay. And then the summer dresses of the Dutch tourists. First of all, I had no idea that the Dutch descend on France in the summer.
It's incredible because you look at it and it's tiny, right? But I mean, on a good summer day in France, the ratio of Dutch tourists to French people is about 10-1. So you have to wonder, like, where do they go? Where do they come from?
I had no idea. See, we're already learning something. Moreover, this summer carried the promise of a victory of Les Bleus, the French, at the Euro, and the French triumphs at the Paris Olympics. Okay, and then you talked about the fact that Macron spoiled the party by unleashing the deepest political crisis since the founding of the Fifth Republic. All right, so why don't you tell us what that political crisis that he has unleashed on everyone is?
So it started with European Parliament elections, which are usually a very boring affair. I mean, the European Parliament has no power. Europe is insanely boring. Participation is usually very low. Nothing ever really changes, but it serves as a bit, like in the US, you have the midterms and typically you vote against the president because you're pissed at something. Yeah. That's the purpose of the European election. And that's been a long, respected tradition. But the beating was a bit heavier than usual. I think Macron came in at a strong third at 14%.
Right.
Which was in line with what Paul said. I mean, no big surprise. Obviously, the big winner was Rassemblement National, which, some people call far right. I mean, it's part of this, conservative populist right that's, you see everywhere in Europe and US as well. But in France, maybe it's a bigger deal because of the history of World War II and whatever. The French people make a bigger deal, I think, than the Italians do about that. So they were the big winners. And then the socialist is somewhat better than expected. But Macron should have just gone on with that. But then he decided 1 minute after the election results were announced to break up the National Assembly Parliament. So it's a prerogative of the French president that he can call a snap election.
Okay.
And took everybody by surprise, including the prime minister whom he had installed just a couple of weeks ago. Apparently, he didn't tell anyone. And very oddly, he set the timing before the Olympics. So most parties were just rambling to even get, posters and voting slips printed. Just no one was expecting it. Obviously, no one has a program for it. And I think there was maybe an element of that Macron enjoys chaos. I think he likes, like a kid who throws the dinner table on the floor and everybody starts screaming and he's laughing. There was an element of that.
Right.
So now here we go. We have to vote again in 2 weeks.
All right. Can I just actually, before you go on, can I read what you wrote about this? You said the wounded ego of a golden child. He says the fact that Macron dissolved so quickly, despite his promise not to do so, suggests that the decision was at least partly emotional. Macron graduated from France's best school. He worked at the most prestigious investment bank. He became finance minister at 36, and he triumphantly entered the Élysée Palace 3 years later. At no point in his stellar rise has he experienced the bitter taste of defeat. The dissolution may be a subconscious desire tolerates to the pain from his first failure. All right, to tolerate, to erase the pain from his first failure. Sorry about that. My cursor was in the way of that. So first of all, you gave me a little bit of an insight in terms of he went to the fancy school, but you were mentioning that you also went to that fancy school. I didn't know you hobnobbed with former presidents, Vincent.
I did. The man scarred an entire generation of men who now, up until last week, considered themselves as failure compared to him. But now we all feel better.
What was he like in person? Like, how much did you interact with him?
Not that much, to be honest.
No?
As far as I can tell, he was friendly. He certainly is, good, handsome man. Very charismatic. He has a bit of that, good investment banker vibe about him, where you don't know what he tells you, but you want to like him. And, when you speak to him, you feel that he listened and he really got you, even though he really didn't say anything. And right. I think that contributed to his rise. People said that about Steve Jobs, that he had this reality distortion field around him.
Right.
But like a good magician, the problem, a magician eventually leaves the stage before the audience realizes it was an illusion. And Macron has been there for 7 years. And, you can only do so much by, being charismatic and good looking. At some point you need to deliver. And that's where and I feel the disappointment of the French is proportional to the amount of hope that they had put in him.
Right. Now, I don't know. I didn't ask if I could read this, so I'm not going to say who it is, but I don't think he's going to care that I'm writing. He says, Macron is an asshole. He could have easily called the election after the Olympics, but no. Why so soon? Because the smaller parties and the RN have spent all their money for the EU elections and won't be reimbursed for months to come. Until then, they will be skinned. The traditional parties can borrow from the banks and as advance on the government refunds they will get, but banks will not lend to the smarter parties. Too risky. So Macron did this to screw with the RN and the small parties, but it will end up being a gong show of an Olympics. Do you agree with that analysis? And do you think that was part of what was driving him? Or I'd love to hear your thoughts.
I mean, I've read it before. If it is, I think it's mistaken. I think Rassemblement National will do very well. I mean, at the end of the day, it's insulting to the French, right? Oh, sorry, you didn't vote right. Do it again. I mean, the natural reaction is to give the middle finger and, oh, yeah, let me show you. So if it is, it won't work. I know the financial issues are concerned for smaller parties, but it doesn't matter. it's really at most a three-way race and most likely a two-way race. Keep in mind we have a majority system, so there is a first round where everybody runs, and all the everybody get kicked out except for the top two and possibly three. There's this weird rule about the third guy, and then that's when the real election is. So the little guys don't have a shot anyway. So I don't really see.
Can you explain to people this weird rule? Because I think that like I was listening to a Medley Advisors piece on this, and they were explaining this thing, and it was confusing AF is for me. So as a North American, can you just explain briefly how it works?
Yeah. So you vote the first time on a Saturday or Sunday, and then pretty much everybody who wants to run can run, and you keep the first two. Well, you always keep the first two, and then if the third guy has more than, I think it's 14% of
I think that is the right number.
Registered voters, and that part is important. Registered. So
Right.
let's say you have participation of 50%. That 14 is actually a 28% threshold, and that matters a lot. So the third guy then if so qualifies for the second round, and then second round you pick, and whoever ends up first wins the seat for that constituency.
Okay,
but yeah, that matters because that third guy is going to be Macron's party, and that cutoff is going to be very hard for him to meet. Now, on the positive side, I think participation is going to be very high because people are, there's almost like a, not civil war, but kind of like Trump, the second Trump election when people were very agitated and anxious to go vote. So now the problem is people are very agitated and anxious to go vote to boot Macron. So I'm not sure if that's going to be that's going to work out so good for him.
Okay, so now let's talk about your outcome. You've talked about three different possibilities. You have no parliamentary majority and a technocratic government. You've assigned a 40% chance of that. Rassemblement National triumph. That's a 50% chance. That's the RN, I take it. Mm-hmm. And then a Front Populaire comeback, the 10% chance. So could we go through those three, explain what they are and what they might mean for the economy and the market?
Yeah, so I think the two base case scenarios are the Rassemblement National triumph and the technical government at about the same. I mean, I had 50-40, but it's probably 45-45 or close to it.
Okay.
So Rassemblement National is a far right party that has been rising in popularity for 50 years now. It was founded by people who had ties with, it doesn't even matter at this point. But it was considered a big faux pas and not part of the traditional Republican parties in France. But now, I mean, you have 40% of the population that votes for it. So you can't really say that 40% of the Republic is outside of the Republic. That doesn't work. So these guys will win for sure. The big question is whether they'll win an outright majority that will allow them to form a government without the support of other parties. And that's where the hesitation is. Okay. My guess is that they will, because I think there's this, it's like in stock market. I think there's momentum to election, and they have the good momentum. I think a lot of French feel offended by this somewhat condescending the request that they vote again. And yeah, the temptation, I mean, you could see it. Imagine the situation in Canada. If you had a chance to, give the middle finger to Trudeau, I mean, I think a lot of people would. So that's my base case scenario. Second scenario.
Before we go on, the RN party, is it run by a 28-year-old? Am I Googling this correct?
Yeah, well, so no, it's run by the daughter of the founder, Marine Le Pen, who's gone
Le Pen,
twice, right? Le Pen.
Yeah.
But she put, because it's this inconsequential European election, she put a 28-year-old, and it's part of the new image, the branding, right? He's young. He's he's the son of immigrants. His main qualification is he's never worked in his life, not a day. His main qualification is that he married, I think, the niece or the daughter of Marine Le Pen. And he looks good on TV. He's tall, he's Despite having never worked or having no experience, he can read the bullet points that politicians are expected to read. So that's his main gig, and he's the one who would become prime minister.
Okay.
In case of, I mean, in France, we are really coming up with extraordinarily good-looking young men as prime minister. Because the current one is 32. So Macron got there; he was like 38, and then he put on a 31 prime minister years old, and now we're going to like 27. I mean, you know, my
you're just putting boy toys in charge of your country.
Yes, but I mean, honestly, after watching yesterday's debate, I was like, you know what? At least we look better in France. Anyway,
okay, so there's a 50% chance that they win, and you're airing that might even be higher. Like right now, you're leaning that way. If you were forced to vote, pick a side. That's what you would choose.
Oh, I mean, no, I would not vote for them, but
no, not vote. I meant if you were forced to predict the outcome, that's what you would choose.
Yeah, I think so. The other that's about the same probability is no one gets a majority. They get like 45% of the seats.
Okay,
and then so then that gets interesting because feeling the trap, because ultimately it is a trap, by the way. Basically, Macron's idea was, okay, let me hand him the reign to power, but make sure that he's so weak that he won't be able to do anything. And I'm going to work with the administration to undermine them. I have the Supreme Court on my side, European Union on my side. So for 3 years, they're going to make a big mess. And then the French will be like a chastised woman, you know, who left her husband for her lover and then comes back begging. So that was Macron's idea. And I think the Rassemblement National is aware of that. And like, well, if we don't have an outright majority, we're not going for this. So that's the part that gets a bit messy, where then, because Macron cannot call another election after that. Like the French constitution had this thing that you can't just keep calling election until you get the result you want, right?
So wait, can the RN choose to not form a government?
Yeah, so Macron's going to call... You know, he's going to call and the RN can be, no, we're not going for it. So then he has to call someone else. And then the RN can be, no, we don't want him. And that for Europe, that is, I know it sounds crazy for the US, but for Europe, it's business as usual. You know, Belgium had no government for 2 years and the country ran fine. Italy has, more governments. I think in the past 50 years, they had like 65 governments. So we're in a constant state of crisis. But it does mean that for a while it doesn't look too good, right? Especially as we have the Olympics and we just don't have a government. So that's.
I think a lot of Americans that dislike their current government might not be that opposed to having no government.
Yeah. There's almost a libertarian charm to this.
Yeah. Okay. So that's the kind of the other messy kind of outcome. And then what is your kind of outlier? The Front Populaire makes a comeback.
Yeah. So the left has been very weak lately in France, and very divided. But they figured out that this is kind of an extinction level event for them. Yeah. And they coalesced very nicely after 2 days after the election. Basically, the left is divided between a kind of proto-crypto communist group and then more kind of moderate center left. And they don't agree on much, but they do agree on keeping their jobs. So by having a union, they go from being totally extinct to potentially having a majority. Because again, keep in mind that there is this second round, right? And there is still this some level of fear of Rassemblement National. So their hope is that if they qualify for the second round, if they barely meet the threshold, and then everybody would coalesce and back them up, and they have a small chance of making it to making a majority. If that's the case, I think the markets would really not like that scenario.
Right. Now, having said that, you kind of conclude that the market's probably not going to like any of these scenarios. And your conclusion is France's next government will be weak, ineffective, and unpopular. And then you go on to talk about a trade that you might use to take advantage of that. And I'd love to talk about this: short oats, long BTPs. So explain to people what those two instruments are and why they differ from what a lot of people would generally do, which is to short them against the German bunds.
So OAT, Obligations Assimilables au Trésor, is the French 10-year government bond. It's the most liquid debt instrument outside of the US and Japan, because France, I mean, it should really be the benchmark for Europe. I mean, Germany is, but they have so little debt that actually we have more.
Oh, I didn't realize that. So it's more liquid than German bunds.
Yeah. It should be the benchmark. Because obviously the German economy is bigger than the French, but we beat them at debt. And we beat them good.
Yeah, and also a good-looking prime ministers.
Oh, for sure.
Yeah.
Also, our debt is a lot more international than Italy's, for example. Italy's debt is mostly owned by its residents or its banks, while French debt, and maybe I'll come back to that later, is very, very, about 60% of French debt is held abroad, which is both a reflection of its traditional, the perceived quality of French debt, but also now a source of vulnerability. We are in some way in the situation of an emerging market economy, which borrows from foreigners in a currency they cannot print.
That's a great way of putting it.
Yeah, but let me go back. So the BTP is the equivalent for Italy. It's the 10-year Italian bond. And the typical spread trade in Europe, like 10 years ago when we had the sovereign debt crisis, is you go long short the troubled kid, and long the German, and then you bet on the spread going up. So remember back when for example, Italy, the low spread is a political thing. Like whenever low spread goes over 4%, the government falls because they can't pay the debt, and that's what brought the Greeks down, the Portuguese. So the typical trade, I think, would be to go long the German, short the French. Now, I'm not a big fan of that for two reasons. One, I don't trust the Germans.
You are French, after all.
No, but I trusted them. No, I trusted them 10
years.
You
just set it up too well, Vincent. I had to go for it.
No, what I mean is everything that Germany's done in the past 10 years has been stupid, right? I mean, shutting down the nuclear plants, getting the migrants in, buying the Russian gas, doing the IC combustion engine, relying on China. I mean, I think 10 years ago we had a crisis of the periphery, and now we have a crisis of the core. In France, it's taking more of a political form because we're more political people, we like protest, and Germany, it's more of an economic malaise. But in the grand scheme of things, it's, which of the two sinking boats is going to sink the fastest. So I don't like to belong to German. And then the second reason why I don't like to do the spread that way is because you pay. Right now, it's about 75 basis points of carry, meaning the French bonds that you want to be short yields 70 basis points more than the German bond that you would buy. And we always have to remember one thing about Europe is we are in a state of constant crisis all the time, and yet nothing ever changes. So
you're making me laugh so hard. Okay, explain.
So you don't want to be paying carry in Europe, because if nothing happens, which is always the most likely outcome, you end up paying it. So that's why I like to flip it and go along the Italians. Right. If you flip it, you have the exact opposite carry. Right now, the Italian bonds are traded about 80 bips above the French. So you correct that. If nothing happens, you correct that. And then in general, I think, France is going into the crisis. Italy is coming out of it. Italy is actually now it's the poster child for Europe. It's the same with Portugal, Spain. They never had much industry to start with, so the increase in energy prices doesn't hurt them too much. Tourism is very strong. You have a lot of Americans coming in. And in the case of Italy, they were the biggest recipient of the EU, the Eurobond. You remember during COVID, we issued like 1 trillion of Eurobond, and then we allocated that money. And Italy got half of it. Some of it was loan, and some of it was just money. Here's 200 billion. Just go build some solar panels somewhere. So the Italian government, which did very well at the election, Meloni. I mean, she was also far right. She was also thought to be anti-Europe, but now she's the best friend with Ursula von der Leyen because she needs the money, and Ursula von der Leyen needs her support. So the head of the European Commission needs the support of Meloni's party in order to get reelected. So that money is going to keep flowing. There's going to be hugs and kisses, and the Italian economy is doing better. Now, when people talk about Italy, they don't like it for two reasons: the deficit and the debt. Now, in terms of debt, it's getting close to France, especially if you adjust for the the large share of Italian debt that's held by the ECB and the other large share that's held by domestic residents. So in terms of, debt that's at risk of capital flight, France is actually worse. And then in terms of deficits, the two deficits are very different. So we have the same deficit, about 5.5% GDP. But in France, it's pretty much all primary. In Italy, there's a primary surplus, meaning that if it didn't have to pay interest on the debt, the Italians would be able to pay the bills. So their problem is that they issued a lot of debt 10 years ago when lo spread, the yields were very high. So they paid like 7-8% coupon on that debt. Now that debt is maturing and it's rolling over at like 4% now. So their primary balance, their total balance is improving just as time passes. In France, we have the exact opposite problem where, 3 years ago, it sounds crazy, but people were paying for the honor of lending to France for 10 years. So we had negative yields in France. The entire curve all the way to 10 was negative. And now we are rolling over to 4, and maybe as the spread keeps going up, 4, 5. So we have this big operating primary deficit that's going to keep growing. So just the passage of time makes Italy a better credit and France a worse credit.
The other thing, I was looking at your chart or table that you included in your research piece. I didn't realize this about the household debt to GDP is dramatically worse in France versus Italy.
Yeah, that's always another thing that Italy is a rich country that doesn't grow, but they have a lot of wealth, low debt, people own their homes. They didn't have as much as a real estate bubble as other parts of Europe. So the Italian household sector and corporate sector is actually fine. France, we had we still have a big real estate bubble. Same story you would see in Canada and Sweden, like, young couple borrowing for 30 years. And it worked when the yields were very low, right? But you had to stretch it quite a bit. And now yields are coming up. So we have a lot of household debt, a lot of corporate debt as well. So in France, it's not just, if you think about the three sectors, like almost from an MMT standpoint, we're looking bad on all three, which I know is impossible from an accounting perspective, but we have a big government deficit. We have a big private sector deficit. And we also have, that's the truth. We have a big trade deficit, which means the surplus. That's exactly how it adds up, right? The gap is filled by foreigners pouring capital into France. So we are much more reliant, because we have this big trade deficit, on foreigners' willingness to finance our profligate government and profligate private sector as well.
So I love that idea that Italy has already had their crisis. They're actually making improvements, whereas France is just entering into their crisis. And ultimately, you could see a situation where maybe it even flips, like you're getting paid right now to own Italy over France, and it could actually go to a situation where it flips.
Well, I mean, it's already happened with Portugal briefly, which seems incredible. Like 10 years ago, Portugal was a complete dog, and now you have some Portuguese bond that trade lower yield than the French. So I could absolutely see in a couple of years French bonds trading below Italy's.
All right. So now the next trade that you kind of took from this is the fact that you mentioned before that France, those bonds are held by a lot of foreigners. And one of the people that might own a lot of those bonds are the Japanese. Talk to us about what you could see happening there and how that might play out.
Yeah, let me step back a little bit here. So, let's go back 10 years ago. You're in Japan. You're like a Japanese fisherman or firefighter, pension fund or whatever, local insurance company, all your life. You bought JGBs and that's it. And, very, very easy job. And suddenly, boom, you get Abenomics. Okay, we're going to trash the currency. The Bank of Japan is going to buy all our bonds, and we're going to have yield curve control and negative yield over 10 years. You have a problem. So you need to buy something else. But again, keep in mind, you're Japanese. You kind of scorn the rest of the world, and you don't know much, so you're not going to do anything crazy like buying Brazil debt or So and then you have a delegation of handsome French minister official that come every year to Tokyo and that have to sell you the debt, and we have a lot of it, very liquid, AAA rated, G7 country, core of Europe. And you're like, wow, this is great, and it's not dollar. You already have a lot of dollars, so you want to change. You want to have some, and it worked for them. It was fantastic. So they kept buying. they also love that it yielded 30 bips more than the Germans.
Right.
Now, for any bond manager in the world, 30 basis points is nothing. But in Japan, if 30 basis points, it's high yield, right? So they love that. Now, everybody knows the euro is a crap currency, but the yen makes the euro look good, right? So it was a crap yield, a crap currency, and a heavily indebted country for anywhere in the world. But for Japan, which had an even worse currency, even worse yield, and even more debt, that looked like a no-brainer. So they bought and they bought and they bought. They bought up to 10% of French, all French outstanding debt now is in Japan. If you go to the French Agence France Trésor, the agency that's in charge of selling our debt, you go on the language. I think the second option is Japanese. That's before we translate into Spanish or Italian or whatever, we translate into Japanese. That's how important what it is for. So now we go to the present. Our Japanese pension fund manager has made about 35% of the currency, and he's had a carry about 1.5% over JGB. So he's a hero, and the bonds maturing. And what is he going to do? Okay, he's gonna look at the TV. He's gonna see the Olympics. He's gonna see that you can't swim in the sand because there's poop everywhere. That there is. No, it's true.
I know. I heard the story, and what I love best for those who don't know, they wanted the mayor of Paris, I guess, wanted to have the actual swimming in the Seine, so they tried to clean it up, and then she was going to swim in it to prove to everyone that it was clean. And the French created a website to tell you when to poop in the Seine at your spots so that it would arrive to her at the time she's swimming.
And she canceled.
Well, she can't be telling people when she's going to do it because then they're going to poop ahead of time. So she's got to just pull it all. So, okay, now I'm going to go swimming before the French have a chance. You guys love, by the way, stuff with poop. It's like every summer, you guys, the farmers take a load of poop and put it on the doorstep of the parliament or whatever it is.
Maybe there's some Freudian.
Yes, exactly.
I don't know. Going back to a Japanese pension manager. So the economy is really going the wrong way. The primary deficit is exploding. The unemployment rate is going up. The euro is very weak currency. So it doesn't look too good. Now, also, he's probably hearing his colleagues at the Ministry of Finance or the Bank of Japan saying, hey, listen, like we can't have the yen at 160. Like that's too low. Inflation is picking up. It's only a matter of months until we let go of yield curve control. So, bring back the money. Bring back the money because the yen is going to go up. And also, he's looking at the Japanese yield curve, where if you look at the 10-year in 10 years, like you stripped out from the Japanese yield curve, you have actually a 3% built-in yield in Japanese government bonds, something we haven't seen probably 40 years. So he has the opportunity to buy the yen at a multi-decade low, to buy JGBs where the yields are multi-decade high. So he will want to do it. And he looks at his portfolio, foreign holdings. What does he have? He has some pretty good investment, I think, in Indonesia, the Philippines, but it's probably, some real estate, companies that are not so liquid. And strategically, you kind of want to keep that. He has a lot of U.S. treasuries in there, but, also the Americans have a big base in Okinawa. So I don't think the Japanese will be allowed to sell their treasuries if Yellen does not agree with them. So what does that leave him with? The most liquid, yen-denominated debt asset that he has is French government debt. And it's just at a time when you see France, generally getting into a political crisis. So I would suggest doing that spread trade, long Italy, short France, but then having a long yen-euro to basically front-run that flow of Japanese selling out.
I love it. I think that's a great call. Bold. And what do you think euro yen eventually goes to? Like, let me just pull up the chart here. Where are we? And we've gone a long way, right? Like recently, let me just pull it up here 1 second. So let's look from 2010. We're currently trading 172 all-time highs.
Yeah.
Do you think, I guess, back to the middle of the range, like 130 to 140 is probably a chip shot?
Yeah, I mean, a lot of it will depend on I think the yen could rally actually more than that when we have an end to yield curve control and and queue in Japan. I mean, my template for that is I still remember when the SNB, the Swiss Central Bank, he did this kind of same thing as the Japanese. Had a peg to the euro, and they said, okay, we're keeping the peg, we're keeping the peg. And then one night they just said, okay, let's go. And it went up by like 20% overnight. So I think the same is going to be true for Japan, especially given how much Japanese capital is invested abroad, and how long this period of financial repression has been. And currencies have this tendency to do that. I think it's in economics called the Dornbusch model of overshooting.
Right.
Like currencies tend to overshoot when there's an external shock. So, I mean, I could see it, I don't know, maybe 120, 110. I don't know.
I'm with you. I completely think we're going to go the other way. Like it's Patrick gives me a hard time about it all the time, but I really think that the Japanese currency is the one of the greatest longs on the board. It's so cheap. Have you gone recently?
Yeah. I have. I went skiing there for Christmas and New Year's, and
you did.
Fantastic powder there.
Yeah. So oh wow, did you go to the part? So the interesting thing about that skiing is that some of the mountains have it's deciduous trees, meaning trees with leaves on them. Yes. So when you
it's awesome. But no, you get bamboos in the ski boots.
Really?
Yeah, it trips you down. Which is kind of but then you have so much power, it dumps so much. By the time you down the slope, you have another foot of fresh powder at the top. It's insane.
Wow, that's awesome, and it's so cheap, right? Like you just amazed.
Yeah, the ticket, the skiing ticket was like less than $50 a day, and I mean I come from California where. A crappy resort in Tahoe is like $300 a day now. So it was amazing, which is, by the way, another reason. I mean, the tourism boom in Japan is for real. Like that little town, Niseko, I mean, it was just packed and packed and packed.
That is awesome. So, did you go with some buddies or you take the family?
No, I went with a good buddy of mine. He was a guy's trip.
Oh, that's awesome. That's terrific. All right. You know what? It's Friday afternoon. I'm not going to keep you too late. I love these calls. I think that they're terrific calls. But before we let you go, in the last time you were on, I think you answered something for Emily in Paris, and I promised that I would not ever bring it up again. So I won't bring it up. I won't talk about the fact that Emily in Paris is going to be on August 15th and come back. But I will kind of look at this one quote that you have in your piece, and you said, how can one govern a country with 258 different kinds of cheeses? And this was by Charles de Gaulle. And I'm assuming this was like many years ago, that quote. What was it? When did he rule?
He ruled, he went after World War II, and then he came back in the 60s. And I think that quote came after he did something very similar to Macron, where he called a vote. He lost it, and then he got mad at the French. But because he was a man of a different time, he actually resigned after losing the vote. Instead of like firing all the others, which is Macron did, he resigned after that, and that was his say, man, the French are just Macron probably feels the same way about it.
Right. Okay, so now the first question I have for you, we're going to play a little trivia game. Since then, you guys have made some more cheeses. Okay. Are there now 500 cheeses, 1,000 cheeses, or 1,200 cheeses?
Well, if you ask, I mean, the number must be big. Now I'm gonna go. The 500 is too low. So it's between 1,000, 1,200. You said the 1,000 is way too close. I'm gonna go 1,200.
You're bang on. I love your game theory that you played me like a Stradivarius. Okay, so now what we're gonna do, just to finish this off, is there's all sorts of different kinds of cheese types. So there's the fromage blanc, the bloomy rind cheese, the washed rind cheese, the blue cheese, the cooked pressed cheese, the uncooked pressed cheese, the goat's cheese. I'm going to ask you if you know what type of cheeses these are. Okay. So we're going to go.
Can we have someone to pronounce it?
Okay. I completely agree. I might have to spell it. So the first one I might be able to do. Saint-Marcellin.
I'd say cow cheese.
So that is a bloomy rind soft cheese. Is that a cow cheese? Let me just see here. Washed rind. That looks to me like almost like a cheese that's like a brie. Do you consider that a cow cheese? You got to tell me. You got to be a little more specific.
Oh, okay.
So that's like, okay.
Yeah, I mean,
okay.
Cow milk. Cow milk.
Right.
Yeah, cow milk. It's cow milk. Yeah.
It's cow milk, obviously, but you got to tell me the kind of, like, is it a hard pressed cheese? Is it?
Oh no, it's soft. You actually have to put in a little cup so that it doesn't spill over.
Right.
It's really good. It's really good. The rind. The rind. You eat the rind. It's good
okay.
rind. It's actually the
so here's one I don't know how to spell. It's Fourme, Fourme de Montbrison.
That would be a Tom, I think. I think it's hard. It's got some the milk. I'm not sure. It looks like it would look like a Roquefort type of thing.
It's a blue cheese.
It's got the blue.
It's a blue cheese. All right.
Okay, but I'm not sure about the milk.
Okay. Saint Nectaire.
Oh, Saint Nectaire. Oh, that's good.
You know this one.
Yeah. What do you think?
I don't know. There's 1,200 of them. How are you going to know them all?
No, you're going. So it's like a Tom. So there's the mountain cheese where you roll them in. They're round.
It is
more on the hard side. It's more on the hard side.
That's correct. It's an uncooked pressed cheese.
Yeah.
Okay. And then our last one for you. Which one am I going to choose here? Bouton, like de Coulette. Culotte.
Oh, that's such a cute. That's you know what that means, bouton culotte. The buttons you put on your pants.
Does it really? Oh, okay.
Yeah, because it's small. It's very small. I think it's gonna be probably like a goat or a lamb.
Bang on! You know your cheeses, man.
I hope when you come to California, I'll get you we'll do a cheese dinner.
Okay, and as long as we can watch Emily in Paris while we do it. Vincent, it's always a pleasure having you on. I hope your call on the yen is as right as your wisdom about the cheeses. For those that are interested, where can they find more about you and your firm?
So my firm is StoneX, with the largest trading firm you never heard of. No, a Fortune 100 company. No one knows that. Listed at NASDAQ, but because we're primarily institutional or we do a lot of commodities, it's not very well written to retail investors. But if you're an institutional investor, you'll have heard about us. You can just basically ask your sales rep, hey, I like Vincent stuff. How can I get on? I write a weekly newsletter. I do roadshows, conferences, things like that. And then for retail and general public, Twitter, formerly known as Twitter, X, is the best place, at Vincent Deluard, Deluard. You can DM me. I love to talk to people, and I think we'll get smarter with good conversations.
Thanks, Vincent. Thank you very much. I always enjoy our conversations, buddy.
Same here. Have a good one.
You too.
And joining us again for a Kuppy's Corner update is Harris Kupperman. Kuppy, great to have you back on the show. I nearly fell out of my chair and spilled my coffee when you told me you were getting bearish. For the last 2 years, you've been pressing this bull trade, and I needed to get you on to talk about what made you change your positioning here.
Yeah, I don't know if I'm bearish. I guess I think the better way would be I'm being responsible. You know, at the bottom in March of 2020. I posted a blog post and said, if you're not going to buy now, when will you buy? And I went max long and really stayed max long for 4 years straight up. And it was really good to me. It's like surprisingly good, like life-changing good in terms of returns. And it doesn't feel as good right now out there. I mean, the economy was accelerating. It feels like it's stagnating. We're starting to see companies miss earnings and pre-announce. I mean, we haven't seen that in 4 years. I think the consumer is really struggling, especially on the low end. I mean, obviously, if you own a home or you own some NVIDIA, you couldn't care less. But if you're, an average guy and you have to live on your paycheck, I think you're getting squeezed. I mean, I don't buy this 3% CPI thing at all. I mean, I wish anything in my life was only up 3%. I can't think of anything that's, everything that I buy, and maybe my basket's a little different than most people, but everything I buy is 10, 15% up year over year. And maybe that's a deceleration because maybe last year was up 20%. But I think everything I buy has basically doubled since 2019. And I think other people haven't seen their salaries double, and they're getting squeezed, and we're seeing it in the numbers. And like I said, if you have a home and you could suck some equity out or peel off a couple NVIDIA shares, like, you don't really care. But not everyone owns NVIDIA. I mean, I don't. And so I just feel like it's a good time to degross. I've tossed everything that's consumer. I've tossed everything that's GDP sensitive. I've sold out of a lot of less liquid names. As an investor, I don't know why, but I just end up with a bunch of QSIPs on my portfolio. People told me, hey, Kuppy, you got to buy some of this, and you end up with 50 bips of it. And if it doesn't work after 6 months or a year, you just have to have a spring cleaning and get rid of all this stuff. And that's kind of what I've done. And I've made up, there's a lot of space in my balance sheet. I'm going on vacation. I'll see you guys in October. And hopefully there's some volatility along the way that I can put some of this capital to work.
Now, did monetary policy have anything to play with your positioning, like the fact that we've been tight for so long and just the way the market is anticipating the rate cuts to play out? Did any of that play into your decision making?
No, I increasingly think monetary policy does nothing. It might move some QSIPs on the margin. I mean, monetary policy is probably really, really important if you're in commercial real estate or if you're running private equity. But look, I have almost no floating debt. I mean, my cars are financed for whatever, number of months. My home is a long-term mortgage. I got a little bit of credit card, but I pay that off at the end of the month. And I think most people are kind of like me. And if you're who has floating debt these days? Like, if you're the bottom third, they don't have access to debt. They're going to pawn shops, or they're going, to weird financial companies, and they're paying way above, the sort of rates I'm paying. And so, great, their credit card goes from 19% to 23%. Like, I don't think it matters. I just don't think those sort of things matter. I think what's happening in fiscal is so much more important than what's happening in monetary policy. And I don't think they're going to cut, honestly. I think they're going to probably hold it steady till after the election. And by then, I think inflation will be accelerating again, and they're going to be almost forced to raise rates again. Maybe they do one cut just to prove they can. But I'm very much of the view that if they cut, they blow up the whole financial system because we're an emerging market. If they cut 50 bips, I think 10s go to like 7 or 8, and we have a solvency crisis. It's like a Liz Truss moment. And so I think the worst thing they possibly could do is to cut. They have to keep raising. They just don't realize that yet.
So one of the characteristics of this last leg of the bull run has been that the weight of the market rally has been carried by all the Mag 7s, particularly the AI story, really driving this on the upside. Now, we've seen these swing highs temporarily in NVIDIA and maybe Micron and others, but yet some of the other Mag 7s like Google and Amazon keep going. What do you make of the price action in the Mag 7?
I don't know. I got this funny feeling that it used to be that foreign central banks and sovereign wealth and all these guys, they bought our treasuries. But after looking at American fiscal policy and seeing that either Biden or Trump's going to be the next president, they've come to realize the joke's on them owning treasuries, especially at 4.5%. And they've been net sellers, and there's nothing else that's liquid that could absorb this capital except S&Ps. And they just keep buying more and more SPUs with a unique focus on, the top 7. And so I think, it's a nice parlor trick. The Swiss bank, prints money. So they create this fake thing. And because all Europeans need Swiss francs because their euro's even worse, they can pull off this parlor trick for a very long time. They buy real assets. It's kind of smart, actually. And I think that's what's happening. That's what's going to keep happening. I don't think this changes until the economy falls apart. But if you look at the Mag 7, I mean, they're kind of tarnished right now in a way. They keep going up, but you have two companies that are very marketing focused. And if the economy is slowing, like I think it is, those marketing focused businesses aren't going to do so well. Tesla is, invincible, but in the end, the Chinese kind of lapped them and built a better car at a lower price point. NVIDIA, I don't really understand this AI thing. And I speak with a lot of people in the business world. They don't understand it. I mean, they spent fortunes trying to understand it. They hired all these people and licensed data centers, but AI doesn't really do anything. And every time we've tried to use it at our hedge fund or at Kedem, it's just created buggy results, and it's just not ready for prime time yet. And we don't have the data team to build it out. So I think people are eventually going to realize AI is a giant flop. It's going to be very much like when they triple ordered Cisco routers in 2020, in 2000. And so what are you left with? Well, Microsoft, that's invincible forever and ever. Apple, sure, it's going to keep going. But I mean, you start to see some of these kind of fray around the edges. And if they stop going up, if these things aren't growing, why would you pay the multiples you are? And maybe, the Swiss and the other guys decide to sell. The problem is if they sell, there's nothing else to buy. Like, what else can absorb that much capital? Even gold is too small. Like, what can they buy? That's kind of the problem. And that's why they keep buying this stuff. No, they're not going to own treasuries. The joke's on them. I mean, we're running, what are we running? Like a $3 trillion deficit this year. And like the unfunded liability grows like 10 trillion this year or something. And, I can totally see if Trump wins, and no one knows what's going to happen. But if Trump wins, I think he comes in there like Erdogan in Turkey on day one, and he fires the central banker and takes interest rates to zero and prints money. I mean, how's that work for the Turkish lira? But, in terms of Turkish stocks, it's been incredible. And I think we're playing that out in slow motion here. That's why they keep going up.
All right. Well, let's touch on, you mentioned that you were degrossing a lot of your portfolio. I'm just curious, as a money manager, as a portfolio manager, and you're approaching this. I mean, when you're degrossing, are you going into a large cash positioning, or do you
No,
hedge
I don't
it
do
out with?
cash.
You don't do cash, right? So degrossing is basically just a way. Well, why don't you explain what degrossing
Well,
means to you?
degrossing, there's a couple ways you could degross. One is you could layer on shorts, but there's nothing really very well correlated with what I own. So every time I've ever tried shorting, it just creates two legs going in the wrong direction. So degrossing means I take it down. So I was running call it 135. Now I'm running call it 115. I mean, I'm still levered long. I think the market goes up. I just think that I want to have room if there's a geopolitical accident or a pullback. I mean, we haven't had a real pullback in a while. I mean, it wouldn't surprise me at all if we have a 20% pullback. And knowing what I know about my smaller companies, if the market goes down 20, my stuff goes down 40. I want to have some firepower to buy it. So that's all. And I want to take down all the illiquid stuff because, one, illiquid stuff just doesn't work anymore. For whatever reason, they get no fund flows. They can't go up. And when things get a little wobbly, those go down the most, and you really can't get out of them then. So that's really what I've done. I've kind of harvested around there.
There you
I've
go.
kept the core stuff. All the things that I've spoken about publicly, I got them still. It's the stuff you've never heard of that I got rid of.
There you go. So listen, I'd love to just get an update with you on the uranium story because look, it had an amazing run at the start of the year, and markets always do this where they go two steps forward and then they pause and mean revert, and we're clearly going through some sort of period where we're consolidating. But in your mind, has anything changed, or what's your views on how this uranium story is playing out?
I mean, look, I think the fundamentals are playing out better than I would have expected them to. We just learned today that Paladin's going to be a bit late in hitting full production, so there's a couple million more pound deficit when you look at that wedge. No, I think it's playing out great. What's happening with the price? I mean, look, the price went from, let's call it 50 in a straight line to 105, and it pulled back to 85. That's normal. That's healthy. I'm sure if you put out your Fibonacci's there, it's going to hit one of those fibs. I don't know which ones. I don't believe in fibs, but I'm sure there's a fib it's hit.
It's hitting fibs. You're absolutely right.
There's always a fib somewhere.
No, obviously you like to express the trade through using the Sprott physical uranium trust unit.
Yeah, that's what I got.
Which fluctuates from selling at different discount levels to net asset value. It's been a bit of a grind. Obviously, there was this kind of intense sell-off a few weeks ago that was really very much about the trust because it just kept selling at a deeper and deeper discount.
Well, physical was selling down too.
It was, but not at the same pace. I think there was a point where it was almost 15% discount. But is it just that everyone got a little ahead of themselves, and now that it's lost its momentum, they just have to take it down in their position sizing? Like, or is it just noise?
I really think that this is a hedge fund hotel. This is the sort of thing that when it gets going and it gets trending, everyone in the hedge fund world gets it in their head that they buy a couple more shares, they'll corner the market. I don't know what it is about hedgies, but they always have this dream of cornering a market. And they go out there and they buy the shares. And, when there's a degrossing anywhere in the financial system, this thing just trails off because it's always the one that they sell. It's reasonably liquid. It's a good funder for other things. And so you have these like sine curves where it trades at a premium and they issue shares, they buy pounds, then it pulls back and then it kind of overshoots and it gets to like teens. And then at teens, there's ARBs that come in that buy it at a discount and hedge off physical and they kind of hold it there. And then it goes back the other way. And, I don't know if the spread's going to blow out wider or not. It always seems to kind of blow out in the summer because it's just less trading volume. But overall, the physical uranium itself has been surprisingly steady and boring. It's been trading, call it 82 by 90 for the better part of 6 months now. The trading volume in physical is way down from historic levels, last couple of years levels. And the bid-ask spread is like $3. It's just nothing's happening. And eventually some utility is going to step up and need a couple million pounds. And then the price makes the next big move. Until then, you have some hedge funds unwinding positions that they bought lower. I think you have some hedge funds that came into it at 100 and it did nothing for 6 months. And their risk guy said, got to cut it. And they're selling at 85. And this is just the normal churn you see in a commodity. I mean, look at the chart. It looks like a big pennant to me. I don't know. I'm not a crayon guy. Maybe you tell me if you disagree.
No, I think that it's just a consolidation in a bull market, and it will prevail on the other side. But what's interesting is that a lot of those uranium stocks like Cameco actually are holding up pretty well along their highs. I mean, a little bit of a pullback, but it was just a few weeks ago that Cameco was at 52-week highs. And do you have any interest in dabbling with these companies, or are you just still playing the physical uranium?
No, I mean, I trade these things sometimes. They're all trades to me. I mean, Cameco should be like a $5 stock. It's obscenely overvalued. And that goes for all of these things. I mean, a lot of them call themselves uranium companies, but they don't even have any uranium, or maybe they have some pound stockpile, but they got, a couple $1 billion market cap and they have never produced any uranium and they probably never will in my lifetime produce any uranium. I don't understand it. These things, when you have these little junior mining science fair experiments in, say, the gold sector, they'd be a 50 million market cap. But in uranium, they're in the billions, and it makes no sense to me because the economics of these assets are kind of mediocre also. I mean, that's why we have a deficit. So no, I trade this stuff. I usually avoid Cameco because I feel like there's a lot of event risk there. I usually trade the ETF, or I think UEC is probably the only one run by adults out of all these companies, and so that's the one I go towards. It trades a couple million shares a day, so you can come in and out of it. But all the other ones I think are just fake.
There you go. Now, last time you were on the show, let's move on. You were talking about A-Mark, and it certainly was behaving very well, giving a little bit back here. But any updates on A-Mark on your side?
No, it's doing well. I mean, the spreads have widened a bit. I mean, we don't have Q2 data yet, but we scrape the web data, and the web traffic's up. I mean, it's a bull market in gold and silver, and bull markets make people buy coins. I don't know why it is, but people don't buy coins when nothing's happening and you're chopping. When gold's making new all-time highs, guys go and buy some coins. And I got a feeling gold's going to make more new all-time highs in the next couple of years, probably the next couple of quarters. And I think people are going to have some FOMO and buy some more coins. I mean, if you don't own coins yet, you're an idiot. Everyone should have a couple coins just because it's just a good risk insurance thing. I mean, that's not investment advice. That's common sense. And I think that when things get a little weird in this world, and you have geopolitical, you have an election coming up, you have all sorts of reasons why things get weird, I think people are going to get spooked and buy some incremental coins, and it's going to be very good for A-Mark. So no, the trade's playing out, I think, reasonably well. I had a little bit of a cuppy pop after I went on your show last time, and we've pulled back most of the cuppy pop, and it's probably a way better opportunity to buy it here at 33 than when it was at 40 a couple weeks ago.
Right. The last thing I wanted to just touch on with you was on the oil rigs, and they actually have done relatively well and held up. I mean, oil itself, first of all, let's even start with that. Obviously, went through quite a deep pullback over the first half of the year, but the overall these oil rig plays are not, they're stone throw away from 52-week highs, and or in the case of even Tidewater, they were making new highs just a month ago. So what's your take on oil rigs? Are you still long and strong?
Yeah, I love this trade. I'll admit that over 100, I peeled off a couple Tidewater, but I still got a lot of them. But no, I own an irresponsible number of shares in Valaris, and it's sitting here at $72, and I really think this goes to a couple $100 when they sign some of the. They have, so the thing with Valaris and why it hasn't responded well, I think, is that they have a bunch of contracts that end this summer and this fall, and they haven't given any updates on if they've signed those. Plus, they have 3 that are kind of like warm stacked, waiting for contracts. So there's this weird contract cliff that it looks like they've sucked at solving for. And I don't think it's an issue with Valaris because they keep signing contracts above 500,000. The competitors are, and we all know that Valaris isn't price sensitive. They'll always undercut the guy, get the rig to work. So I think what Valaris is trying to do is get longer term contracts, and longer term contracts just take longer to procure, to kind of analyze and put into the works with big oil majors. And so I think these contracts will get announced in the very near future. And when they get announced, I think the stock goes to a couple $100. That would put it in line with the valuations of their competitors. Given that they're the biggest player with the best balance sheet and a really good fleet, I don't see why they shouldn't at least trade in line with the competitors and probably a premium. But just getting to where the competitors are at a valuation for rig gets you into the 200 range. But I think from there, it just keeps accelerating. It's my favorite idea right now in the market, that and A-Mark. I like to joke that if you had to build a portfolio today, you'd buy 1 part A-Mark, 1 part Valaris, 1 part St. Joe, and 2 parts Sput, and you just go to the beach for the next 2 years. It's going to probably outperform everyone else's book.
That's awesome. That's awesome. Well, listen, Kuppy, it was fantastic to have you back on the show for an update, and looking forward to having you back on again in the future.
Anytime, bro. Anytime.
All right. Thanks a lot. Have a great one, bud.
Later.
All right, Patrick, as I mentioned, lots to talk about in the markets these days, even though it is slow, but lots of different things are moving.
100%.
What do you got for us?
All right. Well, let's just start off by going through the top 3 things we were watching 2 weeks ago. We were watching the US dollar, then the core PC price index, which was coming out actually today, the day we're recording. And we were watching the AI trade and how things played out. And well, the US dollar really it was generally strong, but the movement was all in Japan. But because that's in our top 3, we'll talk about it actually in a moment. But anything you took away from the core PCE number that came out?
No, that's kind of expected because you can deduce it from the CPI and the PPI, so it was pretty well in line.
Yeah,
but we got to talk AI.
We got to talk AI.
Save it.
No. We'll talk AI now. We were asking whether when was the parabolic move in NVIDIA going to blow off, and it did put in a bearish engulfing candle right after we published the show, which clearly too many listeners acted upon our discretion.
Yeah, that's right.
That's exactly. We're market
AI,
movers, especially
NVIDIA. That's right.
Not only that, we're moving at $3 trillion. No, just kidding.
The world's largest stock is responding to the market huddle. They go bearish.
But anyway, it did peak out, and in stocks like Micron also had a sold on news on their earnings, and so clearly a little bit of selling coming in, but it hasn't stopped the Mag 7s, which we'll talk about definitely when we get to the main chart deck. So let's move on though.
Actually, Patrick, before you do, I just wanted to highlight one thing that I thought was super interesting. I grabbed this in my daily update that I send out to my subscribers. I actually highlighted this JP Morgan survey that they did. And so let me tell you what it was. It says, where do you see NVIDIA's market cap at year end? And right now it's 3.1 trillion, or at least at the time that they asked this. So your choices were greater than 5 trillion. Nobody thought it was going to, almost double again. 4.5 trillion, really no one thought that. But guess how many thought that it was going to be 4 trillion? So what's that? Another third? So guess how many out of them? This is institutional, folks. This isn't like, JP Morgan's wealth management guys. This is institutions. How many do you think thought it was going to go above 4
as a
trillion?
percentage?
Yeah.
40%.
Well, you're a little high, but 30, 29. And then on 3.5 trillion, another 29. And then on 3 trillion, 24. So what is that? 60 plus 24, 84% thought we were going to get no correction in NVIDIA between now and year end.
Yeah, that's insane.
Like
or that there would be a correction and then it would continue to rally back up.
Well,
right?
I guess you're right.
Right?
I shouldn't say that. At least at year end, we're higher or even.
Right. Which is
only
insane.
18% thought that we could actually be down on NVIDIA for year end. I think
what could go wrong? What could go wrong?
I think we're going to look back at this and just say, wow, that was it. That was the top. This is insane.
Yeah. Well, you know what? Right now, well, actually, we'll talk about the charts in a second. So let's talk about the top 3 things we're watching in the coming 2 weeks. Okay. So the first thing we wanted to mention was Japan. And I personally was looking at the US dollar yen. We'll pull up that chart in a second. But what's your thoughts here on Japan?
Well, I think it's interesting. I have to get, for all the Japanese yen bears out there, good for you guys. You've nailed it. Patrick incessantly bothers me about it and gives me ribbings, which he should do because it's been a terrific trade. I do think it was interesting, Patrick, that yesterday during the U.S. Presidential candidate debates, that the Japanese actually replaced their minister. What it was? Let me just grab who it was here.
Currency guy, right?
Yeah, currency chief. They replaced their currency chief in the middle of the night, or I guess early morning. There, that was really interesting, and I don't know if it was timing was on purpose or it's just quarter end, but I think that we're on the cusp of something big happening there. And now, especially with Trump all of a sudden looking much more probable, I don't think he's going to put up with a yen down here, and that the Japanese might want to go out and get ahead of it by sending it higher on their own.
Right. Like, and in my mind, I also think that the bigger macro cycle matters. And if you in any way are inclined to think that there's going to be global economic recession or at least some meaningful slowdown, typically the US dollar still plays a safe haven role in the world. And I know the yen has a little bit of a different relationship than a lot of the other cross currencies, but I generally think that the long yen trade is going to be a 2025 story. And I do think that it's exactly like your bond calls in 2018. You were just 2-3 years early.
Too early?
Yeah, and in the same way, because you get the idea and the big picture, but the thing is, these trends last longer and go farther than most people think. And this is where I think on the short term, would I be shocked if we saw 165? I don't think so. But will it just be that much better of an opportunity when it eventually turns? Absolutely. Right. And so it's just, to me, a sequencing of the timing. It's the trade idea is great. It's just when will it actually start to materialize? And especially after a trend this long and this pronounced, it could take a half a year of a basing formation. The idea that this can be just a V-top reverse and suddenly the yen is rock and rolling. We could have a scenario that when the upper level is hit, that we spend a half a year just establishing the level from which it's going to be the ultimate low of the yen and the high of the dollar there. I still think 2025.
I actually disagree with that. I think it's going to more than likely V. And I do suspect.
Yeah, but you have no track record on anyone.
No, you're right. I've been terrible on the end, and so far it's been absolutely wrong. And the other thing is, you said you wouldn't be surprised if it was 165. You could be right. Who knows? But I will say this: people have been saying, "Oh, we're back at 160. They're going to intervene," and I've always said that they don't intervene on levels; they intervene on rate of change.
Mm-hmm.
So if you're talking, you wouldn't be surprised if it was 165 in a month's time or
that
2
would
months'
cause
time.
If it did that,
okay.
if it did in 2 weeks,
if it was 165 in a week or 2 weeks, then
Oh, yeah.
no, that's
They would intervene.
That's 100%. I still think, Patrick, though, this changing of the FX chief is a big deal. I also think that the Trump, you can see the handwriting on the wall that he's not going to put up with the yen there. I think that all the stars are lining up, and the fact that you're giving me such grief about the position means it's going to work soon.
Well, I'll eventually join you when the technicals actually suggest that you might be right, but that's simply not there. You're just in fantasy land. The second thing we're watching is the jobs numbers. What I find interesting is next week we have a half day and a full closure day on the Thursday, and then the jobs numbers come out on the Friday. So typically, a lot of people in the United States will take an extended long weekend. And Friday has historically been incredibly low volume. And so you have a scenario where the jobs numbers are being released and you have FOMC meeting minutes coming out on the Wednesday just as the market closes. And so you have a scenario where will we see just a low volume kind of volatility emerge on something that catches people off guard next week? It's funny that it falls in the holidays like that.
Yeah, it's a spicy setup.
Yeah.
There's a lot going on. I agree with you. I think that it is interesting that it's happening then.
You think this will be a negative print on the jobs? You think it starts missing eventually here?
Yeah, I think we're close, Patrick. I really do. And I think that it's going to surprise folks. And this is something I've been saying and I continue to say. The first really bad jobs number, the market goes back to pricing in 7 cuts over the next year.
Well, sure.
But
what's that number? Is that 4.5 or 5%? What's a bad number to you? Like, what is it? What would we have to see for the Fed to kick?
Well, I don't even think it's the Fed. I think it's the market will care.
Yeah, but what level is that?
So let's just look here. So they're expecting 185. I guess for some reason there's some seasonal element because last time was 272. One of the things I also think you should be really aware of is keep your eye on those revisions.
Mm-hmm.
The revisions mean a lot. Maybe the actual headline number isn't as bad, but you find that the revised number is another 50 or something or 100. If we get a situation, Patrick, where we're missing by 50 or 100,000, I think that the market is going to take it as we're here. We're not that far away from the SOM rule triggering. I think the other thing is if you look at the economic surprise index, we've been missing for the past 3 months, and it's only accelerated over the last month. So I find it ironic that people have given up about recession, because let's not forget that a year ago, it was the most widely anticipated recession that we've ever had, and now no one thinks it's going to come. They've given up about recession at the time where it's most likely. That's how I feel.
I think so too. And I think that your comment on the revisions is an important one because it could be a scenario where the number isn't look awful this month, but then gets revised a little bit later and suddenly it was a lot worse than expected. But often there's summer jobs and a lot of activity. Like it could be that the jobs numbers start breaking in the tail end of the summer, like August, September. Like there's no guarantee here that this early end of June number is the one that's going to be the bad one. But if we have a slow summer, it could be a very ugly September jobs number.
Right. Like the other day, Patrick, you asked me, and was this for your big picture member clients or were you talking about it? You were asking for the 2007 revision of the unemployment numbers. And it was something that was actually kind of shocking.
They were revising 200,000 jobs a month.
Yeah. So what were you talking about? I'm just curious. What were you talking about that in? Do you have some sort of macro thing that you do?
Of course.
Yeah.
I try to mix it up. I thought it was a
good chart. I thought it was a good chart, and I definitely went.
I think the most important part of it is that all those people that are expecting the data point to be so clearly transparent, often it's muddy waters in terms of seeing the clarity on the jobs numbers. It's really when the stock market reacts that will be the real tell. We'll see.
Maybe. I don't know. I think the bond market will be faster than the stock market.
Yep, sure. I agree with that.
Like I think that I really do believe that
like a 30-year rip. Yeah,
absolutely. I know you won't get the 30-year rip because the curve's going to steepen. I really think it's going to be at the front end. You're going
I want to talk about this. All right.
Number
And the
one,
number
inflation.
one, the week after we have the CPI and PPI numbers, and clearly this continues. Obviously, inflation and jobs, the two things that Fed really cares about, and I think that so much of what the market does next is going to be the path of rate cuts, and so these data points are just so important to watch, right?
Yeah, Patrick, I've been a huge inflation bull, and I don't know if this is a bad sign, ominous for those that are bond bulls, because for the first time, I'm kind of thinking that inflation might start surprising the other way, meaning that we might get downside.
Welcome to my club.
In inflation.
I don't think we're going to see deflation, but I do believe that during this phase of an economic cycle, inflation should deeply revert, and that's all. And I still believe in the secular inflation cycle. Like I think that the whole decade is going to have high inflation, but if we have a 6-month recession, we could see a period where inflation is under 2% on a sustained basis for half a year.
Wait, I didn't realize that you'd left the deflation Gary Schilling / Lacey Hunt.
Well, I mean, I've listened to you enough that I kind of realized that things are not the same.
So you changed. So
mildly.
Are we gonna get that poster down in your
Yeah. I replaced Lacey with Russell.
Russell Napier.
Yeah.
That's
might as well go to a historian. I don't want to accidentally put on a bull.
All right. Okay. What do you want to talk about?
Okay. Let's get to some charts. Let's just start off with the S&P 500. And I made a call to my members that I thought the S&P 500 was going to essentially peak the same day NVIDIA did. And the reversal day on Thursday, June 20th, happens to the T. The same day that that NVIDIA peaked, but NVIDIA has not recovered, and the S&P moved higher, and that's largely because the Mag 7s just kept ripping, and so obviously Apple was kind of lagging. I mean, it did kind of uptick back toward its highs, but like Microsoft just didn't quit, not even a scratch to this trend. And
Amazon, same way.
Yeah, well, Amazon broke out. That's a whole different thing. But Microsoft, in my mind, though, has finished a number of the technical measured moves, like just in terms of rules of symmetry. And when you look at some of the other plays, like when I use Google, Google's been ripping to the upside. You look at Meta, just going for a double top retest of its previous highs. And then, of course, Amazon, which had a huge breakout. Do you know what news? Was it news driven at all? What caused?
I think that actually was the news that they were going to allow direct ordering from China. At least that was the day it broke out. That was the headline going across. And I do believe that's what at least helped it along. Whether there was something else on top of that, I'm not sure.
So let me now, with no technical evidence of any sort, what a probability would you give that this is a prairie dog?
Oh, I think the prairie dog is a very noble animal.
Of course it is.
And I think that given the extended nature of the stock market, that the prairie dog is going to increasingly show up. And so,
but
in
now,
the past, like if you had said to this, like if this had happened 6 months ago,
in April, or
I might have said,
January.
Probably not. Like, probably not going to prairie dog like that. That's lower. Although that's not true. You know me, I love the prairie dog, so I probably would have said it prairie dogs. But I'm even more confident in prairie dogs.
Yeah. So you give it a better 50 than 50-50?
Oh, 100%. Yeah. And I'll tell you,
wow.
I think if it goes back down to 190.
So you lay in a short on this then?
I don't know if I'm doing that. I would I am short NASDAQ in general. So it's probably a large portion of that. But
listen, if the prairie dog is a noble animal, you owe it an opportunity of at least one put option.
You're like shaming me into shorting Amazon.
Just a token put option. Just one put option, just to say you did. You can then come on the show and say, I put in the token, respectful put for the prairie dog.
Okay, well, I'm not going to do one lot. I'm going to do something. I'm going to do it. I'm going to do it properly.
There you go.
Make a mess. Nothing like getting shamed into a trade and then just making an absolute disaster with it. Like
Absolutely.
Yeah.
Absolutely. But what would be dangerous is if we both did it, then we definitely would make a mess of it.
Right.
The volatility remains still at crazy lows. A lot of people love talking about the put call ratio, and I wanted to share a thought because I actually never bothered to look at the way that the option structure developed on that. But obviously, everyone's saying, "Oh my God, the call ratio is so much higher than puts." But I'm speculating on the thought that the amount of puts out there stay the same, and there's just an increasing trend of traders buying alongside gamma in a market this uncertain, making the amount of calls that much larger, allowing the dealers to deal with all the stock, and they're expressing their trades with calls. Is that something that could be messing up the put call ratios in your mind?
Oh, 100%. We have more option trading than we've ever had. We have, like, I think NVIDIA is trading like more options than Tesla did at its heyday. And everyone's buying calls. Nobody's buying puts.
And so the put call ratio may not be
the JP Morgan thing. Like, nobody is worried about the downside.
Yeah, but a lot of people assume that because there's more calls than puts, that obviously means that everyone is bullish and nobody's bearish. But what if
on the whole, yes, you're right.
I'm skeptical of that. No, I actually just think that if I wanted to build some form of asymmetry where I continue to participate in the bull market, but I'm not delta one on the downside being a bag holder when the thing reverses, then I keep hammering the upside with call options, and inevitably I'll get hit. But that's a limited loss that I can define and not end up holding all the equity during some sort of massive bear market reversal. Right?
I hear what you're saying. You could argue that if you're actually worried about the stock market, you actually, instead of buying the delta one, you replace it with a long call.
Yeah, the convexity of the option.
I think that's a sophisticated way of thinking about things. And on the whole, most people use options as a way to lever their returns.
Yeah, that's true.
In the direction of that. So although I'm not disagreeing with you that the more sophisticated players, like big picture trading, are doing things like that.
I love it, man. Thanks, buddy. Thanks for the shameless plug.
But the reality is that most people just are punters and they're buying calls because they think it's going up.
All right, so let's. What I just wanted to just quickly highlight. Notice that the equal weight index S&P just like one huge horizontal triangle consolidation, just pinned. This is like once you take those Mag 7s and equal weight them, it's the S&P has just been motionless.
The stock market is not strong.
No.
And that's what everyone, I think.
And look at the Russell. Russell's way off of its March highs. The Dow Jones still below its highs. No. Yeah, it really has been. That's it. By the way, I wanted to highlight this. Like at some point, these traders are trying to fade this Russell over Nasdaq trade. But boy, has the Russell just been destroyed against that Nasdaq year after year after year. This has been a relentless trade. The small caps have just been a horrible place to be. At some point, you got to think as a contrarian, this is going to massively revert, but there's no sign of that now.
Well, if we think about what's happening, Patrick, we have high rates because we have large fiscal, which is squeezing like the average Joe. So the actual economy isn't strong. And then meanwhile, the people with money are getting more money based upon their interest. So we have a situation where we're getting more and more speculation, but less and less of a strong economy. So in that environment, you get everyone rushing into NVIDIA and like the average stock is not doing well.
Yeah, absolutely. So I wanted to move on to the dollar here and just highlight that beyond the huge volatility of 2022, more or less, you can define the trade range of the dollar to about 7 points for the last 2 years, or a year and a half, let's say. and so bounced. But even then, you could even say the vast majority of that volume was really a 4-point range between like 101 to 105. And right now, we're trading towards the top end of this year and a half range, 18-month range. And so the dollar's crawling higher, and the question is that will there be something that drives this impulse? Because I don't think something like the low weighting of the Canadian dollar could cause this kind of a breakout. It really would need a legit breakdown in the euro in order for there to be any meaningful dollar rally. And what's interesting is that the euro more or less had a devastating drop in 2022, mean reverted back to like 112. It was about 61.8 retrace, I think it was. Hold on, let's see what kind of a fib zone. Yeah, 61.8 retrace. And it's kind of just sitting there.
Pull that up again?
Yeah.
It's almost like these numbers mean something.
Oh, absolutely. Like look at this. That's a weekly chart to the T.
As Carter Worth says, to the penny.
To the penny. Like literally, it's that fib zone worked perfectly. And the question is that if this was nothing but a secondary reaction and a primary trend in those big picture kind of views, is the euro destined for another retest of 95 cents? And that's and that would be what would drive that dollar index, and that's something that's going to be really interesting because obviously renminbi is pinned to a basket as the euro movement matters. There's going to be all sorts of implications. I'm sure the pound sterling will have to follow suit to some degree or another, and that could cause the entire currency baskets to move. Maybe only the yen will be marching to the beat of its own drum, but will this trade range on the euro give out at the bottom? Will we see price action inevitably drop below 105? And that's the puzzle piece to solve, I think, on the currency market here.
Well, I think that's some great analysis. I don't have an answer for you. I am worried about that, and I'm worried about that because I think that the global economy is slowing, and I feel like we might get an up move in the U.S. dollar. In that kind of, like when.
Yeah, that's my call.
Yeah. So I'm nervous about it. I am. I'm not.
Well, you're not nervous about it if you've got enough US dollars, but
but I'm nervous about it in that if that happens, what that means for financial market, global markets. And I think
I look at it from a glass half full, which is if that did happen and we had shit hit the fan, for the first time, we'd have a proper reset that you could be a genuine bull and pull out the shopping cart and go shopping and buy everything. Because the problem here is that the market has no asymmetry in pressing along until there is some sort of kind of rebalancing of everything. And
you mean on the stock market? So you're hoping for a correction, so you can buy stuff.
Yeah, absolutely. If we have a dollar rip and a correction, then it kind of resets everything. Like how did the traders like Kuppy make all their money? They bought 2020 low. You need a nice correction low, and then that's when you make the biggest money. When you go buy, not when you're chasing things that have been rallying for 2 years and you're buying things that have already been, three baggers to the upside. The asymmetry of being long is worse, right?
Well, I don't disagree with that, Patrick, but you're already getting to the low and you're forgetting about all the pain that's involved with getting to that low.
Oh yeah.
Right. Like you're talking about Kuppy buying the 2020 lows, but think about the
pain going there.
The 3 months of pain. That was actually, it was kind of
1 month actually.
Yeah. Well,
it was 1 month.
Was it?
Yeah.
No, because it started in January.
No. It was in between the Feb to March expiries. Remember, it was.
Was it really?
It was from from 1 month's expiry to the next.
You know what?
Kev, we talked about this on the show. Like I can't believe your fish brain memory.
I don't listen to what you're talking about.
Like literally, it started on the Feb 20th of the expiry, and it was the peak, and the expiry on March.
1 month.
It was exactly 1 month, but it went from one expiry to the next expiry. Literally, OPEXs were both the high and the low. Isn't that freaking insane?
You know what? I didn't actually remember that. That's wild. That was a bad month.
I know we talked about it, so you did just forget.
I'm sure we did. I got part-timers.
Yeah. Part-timers. Anyway, the
Part of the time I listen to him. Part of the time I don't. All right. What else you got for us?
like half the listeners listening right now,
Right.
they're part timers. The by the way, just looking at this S&P right here, isn't it interesting that we popped and retested that high and gave it back? Whenever you see something like that, it is reminiscent of this candle right over here, which is a kind of first made its peak, pulls back for 5 days, goes back to retest that high, and then some sort of sell cycle begins. And I'm not making the call that it is, but if this in any way gives the downside of 5,500 after this little pop, I would take that as a bearish reversal.
Well,
now it hasn't happened yet, but let's see whether or not it follows through on that. Anyway, so moving on, I wanted to just touch on gold. The way I keep describing it is that gold is most trends follow the very basic premise of the market advances 2 steps forward and takes 1 step back before resuming the trend and going 2 steps forward again. And so we had an amazing bull run, and now gold is consolidating. And so to me, I don't have any reason to be bearish gold. It's just accepting the fact that we're in some midst of a pause before a bull trend could resume. The question and the puzzle piece to solve is gold going higher from these levels, or does it have one more dip lower? I still think that it would be technically in line if gold even had the vulnerability of a quick drop of even $100 over a week. But all of it is buy on dips. Like I think that if you're gifted that kind of a dip to buy on, I don't see gold really going below 2,200 unless we have a liquidity event where everything is just hitting the bid, right? Like a COVID scenario. But unless we have that, I think that gold here is consolidating for what will inevitably be a bull breakout. We'll just have to see what happens. Any comment there, or go on?
Well, I don't disagree. One of the things I always find amazing is that people get so upset about gold and they'll say it's so disappointing. And I'm like, we just had like a dollar rally. We just had interest rates go from 0 to 5. And yet the gold is, at the highs.
Yeah.
Like, what do you expect? Like, one of these times eventually we're going to get, although we're just talking about dollar continuing rally, I think that longer term picture, the next major move for the dollar is lower, which I think will be brought on by Trump. But anyways, the next major move for the dollar is lower. And the next major move for the front end of the interest rates are lower. So we're going to get a situation where you actually get those bullish things. And what's gold going to do during those periods? I think it heads a lot higher. I'm with you.
I'm 2025 bullish gold. Whether the trend begins in 2024 would be really nice. But I'm in the camp that we're going north of 3,000. It's just
I think you can't even tell path. Because it's driven by central banks. Central banks are providing the underlying bid to keep this thing up. And the reality is that eventually it will turn, and the investment public, or at least the Western investment public, will also join in. And when that happens, the thing's going to the moon. We're going to get the $1,000 up week that I've been predicting.
Oh, there you go.
I'm not pulling off that call. I still think it's happening.
All right, let's briefly talk about crude oil. I just want to. It had a really nice bounce off of that low. It was very oversold, but it continues to sit right at its fib. And so we're in a situation where this $82 level, it tried to break it this morning and gave it all back. Now, that doesn't make me outright bearish oil, but if oil can't beat 82 on the upside, it means that there's more basing to come, which is whether I don't know whether I want to make a call that it's going for a double bottom retest, but could we see it venture back down below $80 to the mid 70s on just a short term basis to kind of retest some of these zones? If the bulls can't beat 82, then this thing is going to grind for the month of July.
Could be. I'll tell you, Patrick, I'm kind of torn because on the one hand, I think the global economy especially is slowing, and we're going to get less activity, which will be crude oil negative. On the other hand, I look at the geopolitical situation, and usually I'm not one to worry about geopolitics. And the reason I don't worry about geopolitics is usually it's all in the market, meaning that the people Market participants are already concerned about it and they're already pricing it in. Yet I look at what's happening, with Lebanon and then with Russia and Ukraine. And it seems to me that the situation is as precarious as it's been in ages, and yet no one cares. Everyone's more interested in what NVIDIA is doing. So I'm not sure. Some of the smarter people in the oil market tell me that there is a geopolitical bid in the oil. So maybe this rally of the last couple of weeks is that geopolitical bid.
Right.
And maybe if it doesn't materialize over the next little while, we do go lower. Having said that, I am concerned that there is something potentially much bigger to happen. And you know me, I hate like trading on geopolitics, but I really think that the market is underplaying the potential risks of something happening on the geopolitical front.
I'm with you on that. I generally think that we're much closer to the bottoms of oil, even though during this kind of summer period, it's not impossible for oil to retest lows. So it's not like it's all upside from here. But I think that when you look at downside risk versus upside potential, it's completely asymmetrically skewed in the bull's favor. But it's just about the time frame of how long you have to wait for a bull trend to actually engage and the trade to start working. And particularly when it's expressed in futures that have expirations. And you dealing with term structures and things like that, it makes it a little bit messy. It'll be interesting to see how it establishes. By the way, I want to just touch on bits in the sky for a moment. And listen, up until 2 weeks ago, I was giving the bulls the benefit of the doubt. And only because that way I don't look like I'm persistently bearish. But I basically...
I like how you said I don't look like I'm persistently bearish.
So inside, I'm a no-coiner. I'm the worst. I'm the worst. But the thing is that as it retraced here into the 64 to 65,000 pocket, which was the fib retracement zone, I was basically saying that this is the pivot, which is if the bulls are going to take this thing to 80,000, then they're going to hold the line, use the buy on dip as an opportunity, and get this thing right back to the highs in a short period of time, and establish the trend that this is still being accumulated. There's healthy money flow coming in, everything's fine, and this thing's ready to go. Instead, they gave back the entire May rally, and this makes this an incredibly toppy and distributive chart. And while it hasn't given out the neckline and the base at 60,000, look at this. It had this monstrous sell day back on the 24th. And where's the bounce? This is like the worst bounce I've seen. Like an example would be like back in May when Bitcoin made this 2-day sell-off. Look how fast the bulls recovered it. Within 2-3 days, the entire sell-off was reversed. Right? Instead, here we have the sell-off, and 4 or 5 days later, it's still much closer to the low of that range than it is to the high. There's no money coming in. Somebody is selling. This
you obviously don't understand Bitcoin. You don't know that the halving is hugely bullish. And have fun staying poor, buddy.
I'm so sorry.
I don't know what to tell you.
Anyway, okay, that's it. We're moving on. We're not going to dig ourselves a hole. Let's just, I said it. Let's move on. Copper also is sitting right in a fib buy zone. I'm curious whether or not this is enough of. First of all, was the bull trend truly a new bull market? And if it is, typically when we get to this type of a pullback is where the bulls would come in and buy the dip. And so this is similar to where we were with Bitcoin in a sense that this is a level where buyers should be buying. If this is a bull market, you should see this thing work its way back to 475 in a short period of time and have been bought. And the longer it stays down here, more importantly, if it gives out 4.25, that's a nasty blow to the copper bulls. I'm going to give the bulls the benefit of the doubt. This is an interesting buy zone, but the bulls better show up here and immediately start working this thing to the upside, because every day that this thing stays down here and crawls lower, the more likely it is to have its feet kicked out from underneath it.
Don't forget, It has a PhD in economics.
It does.
And so we
It
know
does.
this is after seeing this chart, we know from February to May or to middle of May, the economy
Was
the global
booming.
economy was the strongest we have
It's
ever seen.
You're
But
such
it's
a
had
dick.
a couple of months where it's been the weakest we have ever seen.
I think. Oh my god! I'm not even gonna say anything.
Go to your next
I'm like literally. You're giving me bait to make a fool of myself. I'm just gonna shut up and just let's move on. The when we go look at the bonds, surprisingly weak on that PCE price index. A little bit of selling here. This is the 10-year note, and but I'm still bullish.
Of course you are.
I'm still bullish. What's interesting, Kev?
It's like there's a bear shit in the woods. Like,
but I want to talk to you about junk bonds here for a moment, though.
okay.
The credit spreads still haven't blown out. They haven't even budged. They haven't even budged. And to me, this has always been a canary in the coal mine of where the signals start to come in, whether or not something is really out of whack. And we haven't seen this give a warning sign yet. I mean, even like it's still holding near its 52-week high. And
that's a good point, Patrick. It's really good. And I'm going to tell you a quick story if I could. Can I interrupt for a second?
Yeah.
So I was at a dinner and it was actually Carter Worth. Like I joked about him, but he was hosting it. And back when he was with whoever he's with, I can't remember the name of the firm. Anyways, it was an institutional dinner and there's like 10 of us at the table and he's going through and he's asking everyone's opinion about the next 3 months of the stock market performance. And I'll never forget this one fellow said, what are credit spreads doing? And credit spreads at the time were very tight. And he's like, absent credit spreads widening, I'm not going to overthink it. We're headed higher. And he was absolutely correct. And I completely agree with you that for a real meaningful correction in the stock market, we need to see credit spreads blow out.
And it hasn't begun. It's not even a crack.
Yeah.
It's like there isn't even warning signs or thing. Like the only thing that is it's heavy in a sense that it hasn't really gone up. It's been more crawling to the upside, which is kind of implying that it's found fair value of some sort.
Well, I think it's found fair value because credit's so tight that you can't, like the chances of it, as you approach zero, which we're obviously nowhere near zero, but we're at near all-time tights. Yeah. It gets more difficult to go through that. And so it inevitably starts trading like a 5-year bond or whatever the duration of this index is. I can't remember this one. Yeah. But I'm with you, Patrick. I think it's a great point that you bring up. We have not yet seen any sorts of distress in the credit. And I think that might be something to watch when it comes to things that might be a signal that this correction in the stock market is either going to be shallow or whether it's going to actually get more severe.
All right. Let's see. All right, Kev, I'm done, but you're not.
Right. You've actually got me. I've been bad lately at doing crayons with Kev. We've missed a couple of weeks.
But we are here. So we asked you to come up with a chart. So Kev, why don't you explain what's on your mind here?
All right. So I'm doing the Kev's cup and handle formation. And for those just listening along, you can't see that there's a picture of a cup with the handle inside, which is basically how good I am at technical analysis. And we're doing the US 10-year yield spread. You know what I got to do? I got to say 10 twos just to piss off Morris. Morris's big thing is because for some reason, a lot of charting software brings it up 10-2, which makes no sense. I don't get it. And he's like, you can always tell somebody who doesn't know what they're a real bond trader. They'll say 10-2. So if you just want to make Morris mad, Morris Sachs, our good friend with Inside
10
Baseball.
twos. What are 10
just
twos?
Talk about 10-2s. He'll love it. He'll love it. There's nothing he likes better than talking about 10-2s. All right. So the 210s, this is the yield spread. And it really, in 2021, it had widened out to 150. Obviously, as the Fed went and started raising rates, we had kind of a like an inversion of that yield spread. So it went from 150 all the way down to 100. We ticked there like 125 in early 2023. We went down and we retested it in the middle of 2023. That was towards the end of that kind of September SEP. That was the real bearish one where they were really hawkish. Since then, we've gone and we've rallied back up. We're now minus 37. And before I go any further and start telling you about my technical analysis on this, I am very aware that I am doing something that I shouldn't be doing, because the reality is you cannot trade 210s like this in terms of that's not your actual P&L. And that when you're trading 210s, you actually have to, and in holding it, you have to beat the implied forward carry. So like if you go look right now, the 210s are minus 37. But if you go looking at the actual kind of 1 year out 210s, they might be 0 or even plus 10. I haven't looked at it lately.
Yeah.
So when you're trading this, it's not just trading the absolute cash level. You have to beat what's already priced in. Now, having said that, sorry, go ahead. You will go with your question, or will you?
No. I was just gonna say, like, doing technical analysis on the 10s twos. Is it not like a chart crime, like putting a moving average on the VIX?
It's not quite the chart crime, because the reality is, if you think about it, when you're doing a chart crime, a technical analysis on TLT, the same thing's happening. You have an actual positive carry that you're not getting. So this occurs all the time. In terms of it's more an example of why technical analysis is full of shit as opposed to me. I just cracked myself up. Just pissing
you're laughing at yourself. That's such a dad thing
everyone
to do.
off today. Anyways, huge cup and handle formation occurring here in the 210s. And so we got to bounce back up from minus 125. We've been around between minus 10 and minus 50 for the past, almost a year? Looks like it's heading higher.
But when you really put the macro landscape on it, the Fed is very clearly moving toward a cut cycle and
Patrick,
a bull steepener.
We're doing technical analysis here.
I know, but the point is that
don't be putting in like fundamental stuff. Just tell me about this chart.
Well, yes. All right. You're observing correct. Like the double bottom that occurred based upon the regional bank crisis and the retest of it, and that came in that summer of 2023, established a low. Since then, this has settled in, but it wasn't actually a bull steepening that had it rise from minus 100 to minus 37, right? That was a bear steepener, was it not?
Let's not worry about that. Let's just talk
point
about
I'm
this chart.
making is that your bull steepener is a great trade. We'll see. I think you're bang on this beautiful chart.
I think this thing's headed.
This is a chart crime on the 10s twos.
That one's for you, Morris. All right. What do we have next?
Well, that's it, buddy.
We have no questions?
I mean, we stopped that for a while.
Oh, I didn't know that. Okay. Well, then that's it. We really have to get more on top of this, Patrick.
We'll back
fix it up soon. All right. Thanks for tuning into the Market Huddle. We appreciate you spending some time with us. Please give us a follow at the Market Huddle. Listen, you know all the drill. Patrick, where can they find you and your wonderful product, Big Picture Trading?
Exactly that, bigpicturetrading.com. And you can follow me on Twitter at Patrick Ceresna. And Kevin, where can they find your fantastic newsletter?
Not on Twitter. You can go to Kevin at themacrotourist.com and send me an email if you want to see some recent writing. Otherwise, you can go check me out on the macrotourist.com. And listen, we can never have too many friends. Bear market, bull market. We're just happy to spend some time together on this crazy ride. Now stick around for the after show.
All right. Danny, jump on here, bud.
Danny and you have to do the beer since I'm a lightweight.
I'm going to let Danny go first because he hasn't had a beer with us in a while. So, Danny, why don't you give this a rating, bud? First, we'll describe whether you liked it or not, and then give it some numbers.
Yeah, I actually really liked it. It was a perfect description of bitter and slightly fruity. I did have it warm because I didn't put it in the fridge.
Yeah, so again, drop it a point for sure.
That doesn't bother you. You guys have all your beer warm almost all the time anyways.
Pretty much, yeah. Nothing ever works there. So I would give this a solid. And you know, I'm going in for a 6.2.
So that's
A solid 6.2.
Hello?
The Russian judges are better ratings than that.
Well, I don't know. The last time I gave it a high rating, you were like, "Yo, you got to go a bit lower than that."
No, it was the
Oh, you go-
evens.
you go
It
from
was
one
the
spectrum-
fact that you went and you were like 9 or 8, and it was like an amateur thing. But now you've gone and you've made up for it, and just like 6.2. You're all over the map. We just don't know what to think.
yeah.
That's what.
But Kev,
That's,
so
Yep.
you know what beer this reminds me of?
Molson Canadian.
No, Steam Whistle.
Oh, okay, I could see that.
It's actually clean, crisp. I could see this beer that if you left this out for like a couple months, it would turn skunky for sure, which is like a Steam Whistle problem, and it's actually a Heineken problem too. Is that like when they don't put all the preservatives in there, you have to drink the beer fresh, right? And so I think this has that same characteristic, but. I love it. I was drinking it in Spain, and I brought some back with me. It's great. I'm
what's
going to
the
go
rating?
way better. I'm going to give it 8.6.
Oh, you really do like it.
Yeah, it's this is truly a sessionable beer. I overuse that term, but this one is. This is one where you could drop a 12-pack down and have a great summer day.
So the real question is, how skunky does the beer need to be if Patrick has left his beer out in the sun and then put it in the fridge, and then he's like got no other beer, and he's like at the cottage or whatever, he's on the patio?
I'll drink it.
That's what I thought.
Yeah. No, but I won't be happy. But I'll drink
You'll
it.
complain the whole time.
I'll complain the whole time, but I'm not gonna stop not drinking it.
Skunkiness is not enough.
That's the Eastern European me. Don't let that shit go to waste. You just bite.
get on with it.
All right. Does anyone have anything exciting to recount? And
Oh, Danny
regale
finally
us with?
moved his ass to Portugal, so he's settled in finally down here, and so I have a drinking buddy down here now.
yeah, somehow, Patrick, I don't think you were ever bereft of any drinking buddies.
No, but it's always good to have an extra.
I think a good drinking buddy was what he was supposed
Oh,
to.
that's right. Yes, that's right.
Yeah,
Like one that's going to really be thick and thin and drink the skunky beer with him.
exactly.
All right, it's the middle of the day, so I'm going to go back to work then if you guys had nothing new, interesting to say.
Oh, that was not interesting. Sorry, excuse me. All right, well, we better end this quick then.
So for everyone, have a happy Canada Day. That's July 1st. And then for our American listeners, happy 4th of July. And we'll see you in a couple of weeks.
Cheers, everyone.